as well, but let's get an understanding of this shortly. And Wisdom Safo with our research team is joining me in the studio. Wisdom, let's get into the trajectory of the cedi's rise over the period. How has it been from January to now?
Yeah, okay. So, Alfred, currently today, I went to 3 places. I went to the Forex Bureau, I went to 2 banks, and at the bank, they are actually selling the US dollar to the cedi at the rate of 12.6 Ghana cedis. So 1 US dollar is 12.6 cedis at the banks. And at the Forex Bureau, it ranges between 12 cedis to 12.5 Ghana cedis. But at the BOG website, they're actually trading it at 13.1 Ghana cedis. But how did we get here? Alfred, we started this year around somewhere 15.52 Ghana cedis to the dollar. And it has declined. And by April 1st, it was trading at 15.36. But currently, at the BOG rate, we are having something around 13.01. Now, the research desk actually tried to have some introspection into the causes of this hike. And we attributed this to 4 major factors. Now, the first factor that we identified was that the BOG actually injected $490 million into the forex market in 2025 of this year, and they are actually having some tight liquidity measures, including rejecting some amount of borrowing from the treasury bills market, as well as an increased gold export. Alfred, actually, in between January and April of this year, 2025, we have exported a gold amounting to $2.7 billion. And this is an inflow. You know, the exchange rate market works on the basis of demand and supply. So anything that tends to demand your cedi seems to increase the value of the cedi. And anything that tends to shun your cedi or increase the demand for the dollar tend to increase the value of the dollar as well. So an inflow of about $2.7 billion is good for the cedi. And in the same period, 2023, we actually had some inflow of 670.5 million. So this is a very huge increase. We can't attribute that to the gold board now. But Alfred, we also looked at the exchange rate, that the exchange rate or the policy rate that you rightly mentioned, that the policy rate also has some effect on the exchange rate as well, because it signals to investors. It's a signal that if the government is having some form of control over how it's borrow, or the rate at which it borrow, it's kind of increase or boost investor confidence. And it kind of signals to other people that, look, I'm a country that is responsible about borrowing, and if people come and invest in my country, they'll actually reap returns. So these are the things and the details that we actually gathered. And finally, we can't exclude the US-China situation. And especially the US, you all remember, slapped a lot of taxes on countries around the globe. And, you know, they didn't factor the taste and preference of the US citizens. So though they have increased taxes for foreign countries, they are still importing and having high import deficits. So meaning the US economy is actually demanding more of foreign currencies. And because they are demanding more of foreign currencies, they tend to put pressure on their own domestic currency. Right. So US dollar is also shaking generally on the international market. And finally, we have to talk about our Ghana gold reserves, the gold reserves that we have as a country. Alfred, our gold reserve within a span of 5 years, or between 2022 and 2025, it has increased by 20 tons. And that is a very huge increase. You know, I'm not to say that we have a gold standard where we back our currency with gold, but, you know, to solve liquidity challenges, the gold reserves serves as a basis or a backbone for any economy. So now our gold reserve stands currently at 30.8 tons. Right. So it's all part of the reasons why we see our cedi appreciating.
Well, thank you so much, Wisdom, running through all those factors and rightly so captured in this particular detail. But let's have a conversation on this. The finance minister is saying that this is not going to be a 9-day wonder. But then again, do we have the right structures internally to support this growth in the cedi? And this is why I bring in Dr. George Dompeh. He is an economist and a lecturer at the University of Ghana. And Dr. Dompeh, good evening. Thank you for joining us.
Good evening, my brother.
Good to have you. Unfortunately, we lost Professor John Gachi. He's the Dean of the University of Cape Coast Business School. He will be joining us shortly as well. Dr. Dompeh, I mean, good times for the city because of the combination of the internal and external factors as outlined, is it not?
Yes, I was listening to the person who you just interviewed, and I think I agree with him to some extent on some of the issues that he raised. Indeed, Ghana, our exchange rate regime is what we describe it as a managed floating exchange rate regime. And any country that practices this exchange rate regime, the strength of the local currency is determined by the availability of the foreign currencies vis-a-vis the demand for the foreign currency. And so the demand and supply of the foreign currencies usually will determine the value of the local currency. In a situation where we don't have enough foreign currencies and people and the demand is higher, then your local currency depreciates. When it happens like that, Bank of Ghana, under the managed floating exchange rate system, would periodically intervene in the market to supply. And when they supply, more foreign currencies will become what available on the secondary reserve market. And when that happens, your local currency then gains value. Indeed, that is what has been the picture. If you look at Ghanaian economy, especially in the year 2022, when we started the year, we had 9.9 billion reserves with Bank of Ghana. And those were the days the global economic turmoil started. And when it started, the demand for dollar increased. It increased because Ghana, we are an import-dependent economy. We import the crude oil that we consume. We consume about 135,000 barrels of crude oil, refined oil every day, and we import. We import quite a number of things. And so if you import most of what you consume to this country, and Ghana is a small open market economy, and our local currency is not used anywhere, then it becomes important that you always need foreign currencies to do to trade with the rest of the world. And indeed, when prices went up in U.S., Germany, and other places where we've been importing, it affected the demand for the foreign currency, because hitherto, if somebody needed $1 to import a particular good, today the person is, because prices have gone up on the global market, you will need $2 to import the same quantity of goods, for which reason you will need more dollars. So even though at the beginning of the year, Bank of Ghana had 9.9 billion, by August, we had almost run out of our reserves. And so from January to August, cedi depreciated from $1 to 6 cedis 20 pesos to 8 cedis 20 pesos. Right, and when between August and October, we didn't have enough, Bank of Ghana didn't have the strength to come to the market to intervene. We saw what happened. By October, $1 was going for 17 cedis.
Yes,
and so that is
almost
the picture
17 cedis,
of our regime.
Indeed.
If Bank of Ghana doesn't have the strength to supply, and there is pressure on the cedi, in fact, it depreciates very fast. And last year, during the last quarter of the year, cedi was not doing well at all. We saw at a point $1 was going for 17 cedis. Yeah. But immediately Bank of Ghana intervened and started supplying. Indeed, Bank of Ghana says that during the last half of the year, they supplied $2.8 billion, for which reason cedi gained value. And so even in January, we saw $1 going for 14 cedis, 53 pesos, on average. And so that has been a picture. And so those who are saying the internal, the domestic forces are also helping with the stability of the cedi, I agree with them. Anything that brings dollar into this country helps to stabilize, the cedi. Anything that can bring $1 to this country has a way of helping to stabilize the cedi. And so a lot of factors. One thing that the commentator talked about that I agree with him is the reserves that we have. You cannot give what you don't have. So for Bank of Ghana to be able to intervene in the market to protect the value of the cedi, they must have gross international reserves. And at the beginning of the year, we had about $9 billion that translated into 4 months import cover. And so that placed Bank of Ghana in a very good mood to supply. And today it has even gone up because the gold reserve, let me say that Ghana from 1957 all the way to May 2003, our total gold reserve was 8.78 tons. So as a country, we haven't done enough to keep more gold. U.S. currency is so strong because they have thousands of tons of gold. But Ghana, no, we had only 8.78 tons of gold. But since June 2023, Bank of Ghana started buying gold with Cedi, with the local currency.
So fact is,
that process has helped the bank.
Yes.
So since June 2023,
Dr. Dompeh, fact is that the Cedi is stronger today. I think you've just touched on it. But then again, let's underscore the fact that the Cedi is stronger today, from what you say, not primarily because of our gold reserves, but the exchange rate is more stable because the Cedi appreciating today is because of the significant surge in dollar inflows on the back of the unprecedented gold exports that we are seeing now.
No, I didn't say that. I want to say that all those factors, theoretically, all those factors can help Cedi to be stronger. Okay. So the surge in gold export really is bringing in dollar. So it can have positive impact on the Cedi. And I'm also talking about the reserves, that now that the reserves is very high, you know what it does? When your reserves goes beyond 4-month import cover, at the beginning of the year, our reserves hovered around 4-month import cover. And today it is even higher because the gold reserve have gone to 31. At the end of the year, we were having 30 tons of gold. Today, at the end of April, we have 31 tons of gold. Now, when you have more reserves, Alfred, it does one thing. We have particular group of economic agents. We call them speculators. Always they observe what Bank of Ghana has. If in their books they see that Bank of Ghana does not have enough strength to protect the Cedi, then they are able to predict that in no time Cedi is going to depreciate. For which reason they would go to the market and buy more dollars. And then later when Cedi depreciates, they will then sell and make more profit. We call them speculators. And so when we talk about demand for money, including dollar, we have 3 motives for demand for dollar. One is what? Speculative motive. Indeed. The speculative motive, the people don't go to market when they see Bank of Ghana has become very strong. And so anytime Bank of Ghana builds that reserves, it provides that buffer, and it provides that signals that we are ready to fight for the Cedi. And so those who want to attack the Cedi will then run away for the Cedi to have a space. And so if you look at it from that perspective, Bank of Ghana's reserves, either they supply, when they supply as they did at the third quarter of last year, they did so, and the Cedi became very strong.
Right.
When they intervene directly into the market, it helps your local currency to be stronger. But even when they have not intervened, and for the mere fact that they have so much there, will deter the speculators away from getting into the market.
I appreciate you for this. And it's a very important point that you make. And this is why I bring in Dr. Joseph Obeng, is the president of the Ghana Union Trade Association, GUTA. Dr. Obeng, good times for you traders at least, because clearly when the Cedi is depreciating, it impacts on you negatively. The appreciation must be putting some smiles on your face, is it not?
Yeah, it is a great relief and respite for business people. And so it is very welcome, and that's why we are all very excited and we are very happy. At least we are able to recoup some of the losses over the years. And it's not only that we are recouping the losses for ourselves, but we have the obligation to also share the gains to our consumers. Because the business that we do not do it in isolation. If our consumers or our customers are hard up in terms of prices and all that, they are unable to buy as much as they could. And business thrives on turnover. So we have to relieve them of this high prices, so that they can also help us to increase our turnover. Business thrives on turnover, because if you are able to service your debt, it means that you have to be able to turn your stocks to be able to go and pay the debts that you pay. So this thing is going to be multifaceted. It's going to help us also to reduce our indebtedness to the banks. We are saving at the port, but when we go and clear, the dollar is used as a benchmark for clearance. So once the price the dollar has come down, it means that we are going to have some savings with regards to our duties. At the same time, we are also saving with the exchange itself. Let's say, for instance, the dollar was 16, and then you have to go and fund 1.6 million to buy $100,000. Now you are going to fund 1,350,000 to buy same value of 100,000, making a save of about 250,000. It will help you to up your capital, and at the same time you have some room to pass it on to your consumer, who then his purchase power will go up for him to buy more, for you to be able to do your business. So it's very good. It is also bringing positive speculation. Positive speculation will then going to do away with the people saving dollar as a store of value. And so in every angle, this thing is going to help us. It's going to help us to be very competitive, because we also do business in competition with our neighboring countries. You will realize that we normally go to Togo, Nigeria to buy goods. If the dollar comes down, our prices come down, it means that the reverse is going to take place for us to enhance on our businesses.
And I do appreciate your thoughts on this. So all things being equal, consumers listening to you right now should expect some reduction in prices of goods and services. All things being equal.
Definitely, because you see, normally they say that when the cedi gains strength, we do not reduce prices. That is not true. If there's a clear predictability, and then you know that the reduction is significant as the one we are seeing, because it's obvious that this reduction is very, very significant, that you may not have any option than to reduce the prices. You see, the market that we have here is not a monopolistic one. It's a highly competitive one. You see the same commodity being sold by thousands of traders. It means that there's a competition here, and that everybody will want to price, or you do not even want to overprice yourself out of the market. And so definitely when you have some gains in terms of calculating your cost and all that, and the SM rate is a very significant component of price calculation, then of course we are going to see some significant changes in the prices positively.
I appreciate your time on this. And my colleague Bismarck was just asking about timelines, when we should expect this reduction in the price of goods and services.
Okay, so if you really understand what is happening in the market, we have the importers who import and who normally trade in this forest. And so when the goods come, we sell to the retailers. And unfortunately, the retailers are normal the importers, but there are many. So we supply to them and for them to sell. So they are at disadvantage. At the moment, when we are talking about the reduction of the forest and all that, forest rates and all that, they are not bearing it directly. Means that they have already bought some of the goods. And then, but what I normally advise them is to strike a reasonable average, so that you do not overprice your items, because others are going to have it cheaper. Those who did not have the goods are going to buy at a cheaper price, and those who bought it at a higher can't wait. If you wait, it means that you cannot sell your goods and also service your debt. People do not look at that angle at the bank.
Right.
And so you struck a reasonable average, be able to sell or offload some of the goods, and then partake in the new cake of the price reduction that will be handed over to you.
Doc, I do appreciate your time on this. Thank you so much.
Thank you so much.
Dr. Joseph Obeng is president of the Ghana Union Trade Association, GUTA there. Right after this, Bismarck Ewusa standing by with the business news. Stay with us.